Hi everybody, my name is MVP and I run a thread at Trade to Win to do with strength meters and actually correlation strategies. And I'm here to talk to you about strength meters and what they do. So the first question is, what is a strength meter, MVP? What exactly are we talking about when we talk about strength meter and strength meter trading systems? Okay, a strength meter really is something that looks at a market or a set of indices, or in fact a set of currencies, which is what I deal with, and it looks at the relative prices of them in relation to one another. That's all it does. It compares the strength of each currency against one another. Remember that. So here is a strength meter, okay, and there are 8 currencies on here, and all this does is it shows you the relative strength of each currency against the other currency. It gives you an index, a gauge, as to how strong and how weak each currency is against one another. Now, most people are used to looking at standard charts. Here is a very, very standard chart. This is candlesticks. It's the pound against the US dollar on a 1 hour. There's a couple of moving averages in there. But this shows the movement in strength between the pound and the US dollar. That's a pair chart. There are 2 currencies involved. Whenever you see the candlestick going up, that means that the pound is getting stronger and or the US dollar is getting weaker, okay, which means that the movement is towards the pound. And when you see it falling, like here dramatically or over here, that means that the pound is getting weaker and or the US dollar is getting stronger, drawing it into the US dollar's zone. Okay, so if we were looking at the strength meter on a certain setting, a certain moving average setting, the way that would be working would be as follows. Okay, if the pound was getting weaker, there is an example of the pound getting weaker. Red is the pound in what I trade in my FXCorrelator, my strength meter, and the green is the US dollar. So there is the US dollar kind of moving upwards and there is the pound falling. Okay, that would signify a fall in the pound-dollar pair. Okay, it's that simple. Okay, in terms of pair charts, I'm going to try to make it a little bit simpler. This is the 20 moving average, the yellow line. Okay, and what I'm going to show you now is the pound as an index. This is the red pound. And I'm going to also pull up the dollar. Dollar is green. This yellow line is the moving average on the dollar index, and this is a moving average 20 on the pound. And now what I'm going to show you is how it works. Here's the pound dollar. So when the pound dollar is falling, you can see that the pound is falling dramatically, and actually the dollar is rising. So with the dollar rising and the pound falling, you get a dramatic fall on the pair chart. Which makes sense, doesn't it? That's fairly simple. Now you could say to me that this is all MVP, this is rubbish. I mean, if I just follow my chart up here, I don't need to worry about all of this. If I follow my lines here and I see it going above the line, I know the pound must be getting stronger, which it is. And I know that the dollar must be getting weaker, which actually it wasn't. And this is where it becomes very important. This is why I love strength meters. Strength meters are about understanding the 2 elements of a pair chart where you trade. You've got to trade on pair charts to make money. That's the only way that brokers and platforms will allow you to trade. But look, we've split it into 2. We've shown you the 2 elements that make up that movement. And that really, believe me, really can make the difference when you're making decisions what to trade. So whilst you might say to me that I don't need these 2, I just want to watch this, let me put it to you another way. If we go back to the strength meter, we have 8 currencies on here, okay? These are the 8 major G8 currencies. Believe it or not, by just watching these on a particular setting, I'm actually able to watch 27 pair charts at one time. Remember that, 27 pair charts are on this screen at this moment. If you don't believe me, just work out how many pair charts you need to see on a giant TV screen to watch every combination of the pair charts here? And the answer is 27. Believe me, trust me. 27 pair charts I can watch from one screen. And it really is relatively simple. On the 27th of January, in the early hours of the morning, 0700, that's UK business opening, if someone had asked you, looking at 27 pair charts, what was the strongest and what was the weakest currency against a fairly standard moving average, I think this is a 20, this is very, very clear. The weakest currency, the currency that you should be selling generally against everything else, is the yellow yen here, okay? And the currencies that you should be buying, which are up here and rising, are things like the red pound, the blue euro, that's the New Zealand dollar in turquoise. It's falling a bit, but it was obviously high, and that's what you're buying. Now, you tell me, 27 of these, you need 27 charts, all condensed up into some ludicrous size like this, and yet you can spot it here very simply. Okay, that is the power of strength meters and the power of the FX correlator, which is what I use, which is a strength meter. If we actually go back to the pair chart again and we show you what the strength meters are condensing, which is actually all this information here. This is the red pound, this is the green US dollar. When you have strength meters that are able to condense this information down onto one chart, can you see how interesting it is? Just looking through this, if someone said to you up here, the pound dollar is rising, is that because the pound's getting stronger, or is it because the US dollar, sorry, is the pound getting weaker, or is the US dollar getting stronger? Various ways. This is actually explained to you down here. So, for example, here where the pound dollar goes up, the pound's getting stronger, but also notice the dollar's getting stronger. What it must mean, though, is that the pound is getting stronger than the US dollar. That isn't a good trading situation. And you must realise why. What we're looking for whenever we're looking to trade is we're looking for, in a situation like this, we want this currency to be above this yellow line, and we want this currency to be below it. Until we see this one being weaker and this one being stronger, I'm not going to buy up here. And sure enough, here's an example. Anywhere here, you see here? You see the dollar below here and the pound above here? It's a buy situation. Now, I do realise that you could simply just buy above the yellow line here. But trust me, if you follow and get into Forex, Forex Strengthmeter dynamics, and follow my site or any other person that's an expert in this field or tries to be an expert in this field, you will start to learn just how powerful these things are, and how powerful you can predict moves. Okay, it really is very good, because remember, it's not just the pound and the dollar you're talking about. You're actually talking about 8 currencies. So while you may be trying to trade the dollar here against the pound, you could be missing out on lots of other opportunities that are going on, which are they have a much more higher probability of you making money. That is the strength of strength meters. That is why strength meters are so strong. The reason strength meters are so strong is because you are always watching for the best potential currency combinations to trade. And again, that's what I teach at my thread, at Trade to Win, and at my charts and my videos. The best potential currency combination. There are 27 pair combinations here. I try and hunt out the best ones, give you the best option to trade. Okay, we've only touched the surface here, because what I do is, instead of just coming up with watching one combination and one moving average, I trade 3 or 2 to 3. This is another one. I actually have a different moving average moving with that one, and I'll even add 3 or 4 other combinations to this. That is why some of the systems I operate are quite sophisticated, and they really can be very, very useful, because I'm not looking at one moving average, I'm looking at multiple moving averages across a dynamic 3-dimensional time frame. Okay? So this is MVP signing off. And just to sign off, remember, my FX correlator is a strength meter. I have got free systems available at my thread at Trade to Win. I'm under the name of MVP there. Contact me at FXCorrelator@gmail.com. Go to FXCorrelator.com for more information. I'm available there as well. And good trading.